Mortgage. Okay. Kelly Foreman, Stock Mortgage. I've been in Stockton for about 10 years. I got my first loan officer job in 1997. So I've been through these cycles. Never been through one like this. It's really interesting. I've sat in open houses with realtors, builders, beg people to come and look at the house, beg for contracts, beg for business. And now it's the opposite, it seems like, right? So it's really interesting. But the issue, well, I kind of I gave you this sheet to kind of go over some things, and I'm not going to try to teach you lending business, but I am going to just go through the stuff they asked me to go through and hopefully give you a perspective of what we do and kind of like, I know some of you have been in the business a while and some of you are new, but the successful realtors I work with have a relationship with their mortgage bank. They call that person on Saturday and say, hey, let me ask you a question. Is this house going to fly with the little house in there? Do you think you could take an application today and maybe give me back an answer tomorrow? Because we know how this process works right now. One of the things they wanted me to talk about was being pre-qualified or pre-approved. So in a perfect world, you would call me and say, hey, I've got somebody who wants to start looking to buy a house. And I'd say, okay. And I'd get with them and get an application, get their W-2s, get their pay stubs, ask them all the questions. And I can get you a good pre-qualification. I say, I feel really good about this person buying a house. Now, the reality is I get a call on Saturday night from a realtor that says, hey, I've got somebody called this. I'm going to show the house tomorrow. This house is going to be gone. They're going to quit taking offers on Monday. Can you get them pre-qualified or pre-approved? I'm like, sure, but here's what I do is I send them an application. They do an online app. They fill it out. I'll go in the next day, pull the credit, and I'll call and have a conversation with them, talk about what kind of loan they might want to do. And I'll say, do you have any pay stubs you send them? No, I don't get pay stubs. They direct deposit. Do you have W-2s? They're my taxes buried somewhere in the drawer. I don't know where they're at. So what I'm going to give you guys is a pre-approval saying, hey, if what they put on this application is correct, we're good. But, we'd like to have them pre-qualified and say, I've looked at all these things and we feel super good about doing this contract. But the reality is things move so fast right now, it's easier, better to usually just do that pre-approval, write the contract up. And then on your own ends, it really stinks because this is what happens sometimes. I'll get the pay stubs and I'll call my borrower and say, you only work 20 hours a week. Oh yeah, we're slow during the winter, but it picks up this summer. And well, then they don't qualify. And that's not a fun phone call for me to call you guys and say, well, never mind with that pre-approval, they don't qualify. You're like, well, what happened? It's like, well, by the time they got around to giving me their financial information, they didn't really do what they said they did on their application. But in this market that we're in, we're all going to have to work together and understand, because if you want me to do the good pre-qualification, which I want to do, we can write the offer next week. The time they dig out their W-2s, the time they get their pay stubs from payroll, the time that we verify with their employee, all the stuff that we have to do that takes time. And, by that point, that house is gone. So just want to talk about that just a little bit. They asked that we go over an application. And you guys may have bought your own house before and done these applications, so we'll kind of go through them and talk about them and see what's in it. Let's do, yes. So we do everything electronically these days, which is very convenient. Because when I got in business in 97, you'd come to my office, we'd sit down, we'd do a contract or an application, I'd pull your credit. Now you can call me on a Saturday, I'll send a link to somebody that day, they can do an application right there. I can pull credit that same day. It just really speeds up the process. And I do a lot of loans in Central Kentucky. I live in Georgetown, I work in Georgetown, but I do a fair amount of business in Lexington and surrounding counties. But this electronic stuff is great because people can scan and email me documents. And so it's not really that hard anymore for people to, back when I first got in business, you had to make an appointment, go see somebody, talk to them, bring your stuff. And that's 2 or 3 days out. So anyway,
But it did help things to be slower. I think one reason it's getting so fast is because of sending the contracts, we don't have to meet with the client, we just send it to them and
right.
everybody says everything instantly now.
And that's a good point, because I'm part of the generation, like, I'm trying to explain to millennials, like, why this is a 30-day process. It's like, man, this is 2022, why does this take so long to buy a house? And it's just like, well, let me explain it. First, there's this, 9 or 10 page application you got to fill out. And when people kind of start this process, they're like, well, why do you want to know so much information? And here's my answer, like, if you're going to loan your friend $300,000, what do you want to know about your friend? Are you working right now? Have you been working? That, like, if you have a history of paying people back when you borrow money, do you have anything you put up as collateral? So all the stuff that we're asking for as mortgage bankers, it's common sense stuff, right? But if you go through the application, we'll just kind of go through this, and I know you can read yourself. But on this sheet they sent to me, they said, please go over the mortgage application and cover it in detail. So just like under the first personal information, name, address, all that's pretty easy. Citizenship occasionally will trip us up. I'll get somebody that's not a U.S. citizen, or they're on a temporary work visa or a permanent visa or whatever they've got. And if you run into a borrower like that, my advice is, hey, let's call Kelly, let's see what you've got, send it to him, let him send it to an underwriter to make sure before we go too much further that we can make a loan to somebody that's in your, status, whatever that may be, whether you're a permanent resident alien or whatever it is. On our end of it, it's important to know if someone's married. In Kentucky, you still take property jointly. It's so occasionally, somebody may not tell us they're married, then we find out they are, then we've got to put them on the deed, but maybe they're getting ready to get divorced, and then it's a weird situation. So we have to work through that. If you put your kids on there, and some of the different loan programs, which we'll talk about in a minute, they want to know how many children you have and what your household income is. And of course, the bottom part there is very important, is your employment and your income. So if you guys are talking to somebody and kind of just having that brief conversation, like, kind of filling them out to make sure they're able to buy a house. If they're not working, that's usually a problem. So another thing I run into a lot are self-employed people. And self-employed people have a hard time telling me exactly what they make because they have so many write-offs. And what I'll see 9 times out of 10 is I'll get the tax return, their gross income is $100,000. So I come in. Hey, how are you? So when I get somebody self-employed, I actually do want to do a little more of a pre-qualification process before you write a contract. Because so often, because tax advantages, they don't show a lot of income, and I can't get them qualified. So they'll have, like I'm saying, their gross income might be $100,000. By the time they pay their employees' wages and pay for their materials they bought, they may net $30,000. And that's a big difference. They're telling me they make 100, actually making 30, which is what we count. So they'll fill all that in. We need to make sure we have a good 2-year history of where they've worked. You flip it over. The application asks for financial assets and liabilities. And once again, the basics, and most people they got a checking account or savings account, but they can list if they have any stocks or if they have a 401k. And really in our approval process, and it's automated, but when we put assets in the computer and run it through Fannie and Freddie, it helps get an approval, right? So like if you're loaning money to your friend, like we talked about, and they say, well, yeah, I do have $1 million in 401k. I'll go, okay, well, that helps, right? If things go south, you do have some money. And of course, we also, from this information, we figure out where they're getting their down payment from. And That may not sound like much, but it is a big deal to us because some things are not allowed to be a down payment. You can't go do a cash advance on your credit card today for $10,000 and go buy a house tomorrow and use that money for your down payment. That's not allowed. Or your good friend, the realtor, says, I'll give you $1,500 to buy this house and you use it towards down payment. That's not allowed. So, and during this process, like everything we're doing, we're checking what people have told us. So we have to get their bank statements. And we go through the bank statements. And if they have big odd deposits, like, hey, where'd you get this $10,000? Oh, I borrowed against my 401k. Okay, that's fine. Or sometimes, yeah.
One of the biggest questions I get, and I have explained it, but it's like, why do they need to know? And I know it's such a silly, we know those answers, but what as a mortgage, what do you give as your answer? Why do you need to know where I got money?
No, that's a good question. And I get asked that a lot because an FHA, and I'll get back to that, but like FHA is very invasive in that fact that like, if your mom gives you $5,000, we get her to sign a gift letter, then we have to get her bank statement for the last 30 days showing she had the money to give it. And then that gets into like, what do you need to see my mom's bank statement? She's giving me the money. Well, the reason is because we have to make sure that we keep everybody honest. And we have to prove that she had that money, that it's not your realtor, that's not the people selling the house, it's not some interested third party that's giving this money. So, and that's what we tell people. And once you explain it, people are usually a whole lot better off and they understand. Because I explain it to parents all the time who gives money. It's like, I don't mind giving money, but I don't want to send you my bank statement. I'll say, well, we only send our underwriters. We don't share it with anybody else. And it's just FHA guideline. If they want to buy this house and you want to give them the money, this is what we have to have. And if you don't, that's fine, but we're done. And just, there's no reason to drag it out. And of course, on their debts, you guys are familiar with what we consider the debt ratio. There's two debt ratios, your housing debt ratio and your overall debt ratio. So we have to look and make sure you qualify for the house payment and for all the payments that you have. Flip it over. And this is good information for us to know too. And it asks if you own other property. So a lot of times borrowers will have other properties. It may be a rental property. And if they do, then of course we need to get the information on that rental property, make sure it's cash flowing, or if it's killing them, they're losing a bunch of money on it, and that's going to hurt them on their application. Sometimes we don't find these things out until we're further in the process, and we'll find a tax lien on a property, and we'll call them up and say, hey, in Prestonsburg, we found a tax lien on this property, and they're like, oh yeah, well, we had that, tax lien a couple of years ago, but it's just a lot. We don't really care about it. It's like, yeah, okay, but we're gonna have to take care of this before we move forward. So when they fill out the application, it really helps us a lot to see if they own other properties and if there's any liens on those properties and what they're doing with those properties. And that's just basically that whole page. We'll flip it over to the next page for declarations. And so I know you guys in the real estate business, that honesty is the best answer always, right? So when they ask these questions, like, will this property be your primary residence? And yes or no. If it's yes, which is the majority of my people, unless they're buying investment property, you get better interest rates, less down payment. There's always benefits if it's your primary residence. If it's an investment property, maybe 20% down payment, interest rates higher. It's harder to qualify.
Why is that?
Because it's considered a riskier property. So if you're not living there and you're not taking care of it, it's more likely to kind of deteriorate versus your own personal property. Mm-hmm. But occasionally, I have people they don't want to buy a rental property, but they want to buy it with an FHA loan with 3.5% down, and that's not eligible. That's yeah. And I do, after I get into some applications, I find that out. And of course, we have to back up and come clean with everybody and say, well, actually, she still lives at home. She was wanting to buy this as investment property and we can't do this program. And then all of a sudden they can't come up with 20% down payment. And so if they fill this stuff out correctly and honestly up front, it saves us all a lot of heartache. Then it just goes on to ask if they have any other property or how they've held title to properties. If they have any affiliation with the seller of the property. And then there's some questions about the real estate transaction. And I run into this occasionally. I don't know if any of you guys have the pleasure yet on the FHA flipping issue. Yeah. So if somebody buy a house and they turn around and resell it, you take your buyer, you're like, oh, we love it. They sign a contract, but the current owner has owned it less than 90 days. It's not eligible for FHA loan. Which doesn't sound like it would happen much, but it happens a lot. Especially in the market we've been in, people are flipping properties. If it's between 90 days and 120 days, we have to have 2 appraisals done on it. And then after 120 days, it's fine. There's not an issue. So, I guess my advice would be like when you guys are listing properties, try to get as much information as you can on history of the property, the people selling it, because when you get your talk with your lender, communication is always going to help with, whatever that may be. You might be able to share some of this information to help solve, an issue up front. And ask if you're co-signed on loans for anyone. Of course, that's a big deal because sometimes that doesn't show up on a credit report. We get into the process and the underwriter's reviewing the bank statements we asked for. And we notice that, mom's making her daughter's car payment every month for $400. And we say, hey, what's this Toyota payment? Well, that's my daughter's car payment. Okay. You may not qualify for the loan now. We didn't know about that. So hopefully if they disclose that, if they're co-signed on loans, that definitely will have an impact. It used to be a lot on student loans. I don't see as much as I used to. I used to see a lot of parents on student loans co-signed.
I had that. People were qualified for like $325,000. They found a property. Their daughter graduates in the meantime before we close.
It goes into repayment.
And because of the repayment, and now they qualify for $100,000.
Yeah.
It's not like that's due. And they can't get a house for love or money. Because of this.
Right. So the rule is if they oh no, if we can prove that you're co-signed and that the borrower has made the last 12 payments on it, and we have to get bank statements showing that the daughter made the student loan payments, then we're okay, we don't have to count it. But like in your situation, since it was brand new, they're co-signed, there's no history.
Yeah, no history.
Right.
So I think what they eventually tried to do was just get everything taken and put under her name. They get off the loan.
Right.
It just takes so much time.
And that's real easy to do with a 22-year-old. Like,
oh yeah.
Can you go get $80,000 student loan? Yeah.
So that's a year of them making their own payment, like if it's a co-signer on a car.
Correct.
Yeah.
So the main borrower can show they've made the payments, then we can work around that. But that's a whole different topic for another day, but the student loans is a real thing. There's a lot of young people, I can't qualify for a house because of student loan debt. And the government luckily has made it better and easier. For a long time on most of the programs, we had to, like if it didn't have a payment and you were either an income-based repayment plan or they were completely not collecting right now, you were in the process like you would deferment. We had to use 1% or whatever amount. But a lot of programs now have changed that to 0.5%, which really has helped us a lot. Because if you had a $60,000 loan, it used to be a $600 payment, now it's $300. So that does help a lot. And then they ask if you're delinquent on the federal debt. And unfortunately, we run into that right before closing. A big lien will show up that we didn't know about. And you're smiling because you've had this situation. Yeah. You're not the new realtor, right?
I am, but
You've had already been that lucky. Right.
well, this happened during COVID where they weren't taking her student loan payments. They wouldn't take it no matter what she did. And then for some reason it went into deferment. It didn't pop up until the very end on, is it Cavers or Cavers?
Cavers, yeah.
Cavers, it popped up like 2 days before.
Delinquent on a student
Yeah,
loan
on a
debt.
student loan debt. Like even though they wouldn't take her payment, they deemed it delinquent.
Right.
That's crazy.
And she tried, but she's like, I'll pay it off. I have the money to pay it off completely. It was like 8,000 left or something.
Right.
Wouldn't let her, wouldn't take payment. It was all due to that COVID mess. So it was like, you're
Well,
not-
that's interesting because usually on the Cambridge report, and this is a report we get from the government, that if you've ever been delinquent on federal debt, it shows. And that's usually student loans for most people.
Exactly what it was for her.
And what we run into is typically if you pay it off, they'll remove it from Cambridge. But I just had this happen recently.
They said it was gonna take them, because of COVID, it was gonna take them 6 months.
Well, that's
Yeah.
COVID answer.
Yeah, it was a COVID answer. It was just like the height in the beginning.
Right, because I had a deal last month where the kid owed, I should say kid, young man owed like $1,500 and he was able to pay it off and they took it off like real quick. Now, the other rule is, if you'll start making payments on it and you can make 6 payments
Six
on it,
payments, yeah.
then we can go back and get financing. But they just have to show that you started making payments.
Well, I haven't had one in the meantime that they paid off and it went real quick, but with her, it took like 6 months to get it out. They wouldn't let her payment, they wouldn't accept her payment. They're like, we're in a deferment program, we're not taking any student
Right.
loans right now, no payments, but yeah, they put a deferment, which came up on her papers.
Right.
It was a, she had a FHA loan, she was good, I mean, decent, everything was good on her.
Right. Just
So-
one.
Hopefully that's, they've got that fixed, so.
Well, I always try to think back when I bought my first house. My wife and I were, it was 1997. We had no money. We got out of college. She's a teacher and started her teaching job. And I was working at a bank. And so I always try to remember, like we did an FHA loan. We had gift money from my parents and her parents. And we had student loans. We had to jump through all the hoops. And back then it took me 3 months to get approved, which, you know, we're not that bad anymore. But it was a painful process. And I try to remember that when I'm dealing with young people, which is like, you know, they just want to get a house, get started. You've got a whole future. These people have proven like they've got degrees, they're ready to work, they just don't have money. And one thing that tripped us up too on the student loans, when we both graduated, we both had student loan debt. And back then, like, and I don't know how it is now, but like we borrow every semester. And you know, when you get done, you have like 10, 12 loans, whatever you've got. And some would be like paid monthly, some were quarterly. And so my wife thought she was making overpayments, and like on her credit report, they had like 6 months past due on a student loan that she didn't ever get a bill on. And they were like, you know, and their answer was like, well, you should have known. Well, it's just like, you know, you get out of college and you get all this pile of student loan debts and you're trying to make your payments. So anyway, I was trying to remember that stuff because those are real things, right? I mean, she was honest and like, you know, we worked it out, but it kind of hurt us there at the beginning. So then they asked if you've had bankruptcies or foreclosures, and that's important on our end because most of the loan programs have a time requirement. You have to be past the bankruptcies or foreclosures to get another loan. We won't really go through the acknowledgements and agreements. We'll flip over to military service. And one of the things I want to talk about, a few of the different loans. The VA loans are great loans. If you have a veteran, they get 100% financing. In normal times, you could ask a seller to pay some closing costs, and the veteran can basically get into the house for nothing. And I had a situation a couple of weeks ago, which really was interesting, talking about this market we're in. I had a veteran that wanted to use his VA loan. That's great. He served his country, comes back, he's eligible to do 100% finance. The listing agent on the house he wanted to buy said, no, we're only accepting conventional or cash offers. That just really rubs me the wrong way. I was like, this guy qualifies for a VA loan. He's entitled to that, and he's got good credit, he's got good income. I've looked at the house online. I don't know why it wouldn't pass the VA inspection. So, you know, it's kind of like we're having these small group meetings. It's education also. Like, don't be scared if you've got a house listed and somebody offers you an FHA contract or a VA contract. These are good borrowers.
And they can still come up with the money if it doesn't raise.
Well, yes, and as a matter of fact,
Right.
this particular loan, they could do conventional with 10% down, which they still have PMI, which on the VA loan you don't have. And the VA is just such a better product. And They should be able to use that. But yeah, the realtor ended up saying, well, we got a backup that if for some reason this doesn't go VA, it'll go conventional. And I guess a lot of people are scared of like the VA appraiser going out and looking at the house and then doing inspection. What I've seen most commonly is like, okay, the gutters are falling. But you don't want your client to buy a house with no gutters anyway. Neither does the government. And a lot of the repairs are pretty simple things. They're not like earth shattering. But in this environment we're in, I know that most people selling now, like, I'm not going to need it. You can either buy it or not. But anyway, so the VA loan, if they mark they've had military service and they qualify, that's a great option. And then for Section 8, demographic information, the government monitors banks, lending institutions to make sure that we're not lending to certain people or to people in certain areas or whatever, because I'll get that question too, is like, why should I respond whether I'm Hispanic or not Hispanic, male or female? And it's like, well, you can look down there, now they've added boxes that say, I do not wish to provide this information. That's fine, you don't have to provide it. But for monitoring purposes, it helps the government make sure that we're not specifically targeting people we're not making loans to, or areas we're not making loans in, whatever. So,
Redlining.
red line, yeah. That's are you guys familiar with red line? That's kind of an old school. You guys have any questions on the application?
Is there a downside to the loan?
The appraiser. It's not the loan, it's the appraiser.
The
The
loan's
appraisers
great.
have been extremely difficult. I've had them tell me, we need to do a market adjustment. It's not up to them to do a market adjustment. Great, non-veterans homeless. Thank you. Because they won't even appraise it for value. It's been so utterly ridiculously low. I've had it several times happen. Great, now your client's homeless. Thank you.
Yeah.
It's the appraiser, it's not the loan, it's the appraiser. And I know why sellers back away from it.
Well, and VA, when I order an appraisal through VA, I have to go to their website and they assign the appraiser. And sometimes I'll get somebody from Cincinnati doing an appraisal for somebody in Lexington, Georgia, and that drives me nuts. That's a different market that they're not.
Yeah.
And appraisers there's a big demand right now, like for everybody, but there's a demand for VA appraisers right now because they have so many loans and so they are a little bit slower.
Well, they have to do complex right now too.
And I won't disagree.
Yeah.
So,
We need a better person. for appraisers. Anyway,
The only reason I'm asking
another class was.
my husband's active duty and
Uh-huh.
he got a phone call on Sunday and he said, when we're looking, and he couldn't tell me why. He's like, when we're looking, we might have to go through the 8 loan. I was like, oh, why? He's like, oh, I'll extend it later. We might have better options. So I was like, wait, what's wrong?
Well, there's nothing wrong with the loan at all. It's a great
No,
product.
it is a great
Yeah,
product.
it's just the appraisal. Appraisal can be done.
That's appraisal with 10,000 under list, because the market, I mean, it's very, and of
Well-
course, there was multiple
I had one
listed
for
over.
40,000 in Richmond with land, where there's no land available at all for lender money. And then the appraiser fees. When you talk to them.
Yes, and are you familiar with what they call the time order? So VA will notify me like 3 days before they send the appraisal and say, hey, just heads up, this appraisal is coming low.
Yeah, I had you to talk about.
No. You had that one.
I know.
You had some strong good deals.
I think, but I think it's like, I have a lot of clients, they have a lot of help.
You're right.
Like they're all, I guess, I'm the crazy man. or something. I'm qualified.
Okay, so I'm gonna go through this closing disclosure. So you sold the house, now they're gonna send this to you. You're gonna look at it and your client's gonna call you instead of me and say, I got questions on this. Because you've been hanging out with them for 3 months, showing them houses and they have a good relationship with you.
I'm so sorry.
Good?
I'm good. I'm good.
Yeah, have a good day.
Me too.
So, if you haven't looked through these yet, it'll take a few minutes to go through it. But I think it's good to have a basic knowledge of this because you will have your clients call and ask you questions. Which what I would say is always call your lender, but you may want to talk to them anyway. So you have a loan amount, you have their interest rate, their principal and interest, their estimated taxes and insurance. So you'll see like closing costs are $6,300. And then on this particular deal, they need $33,990 to close. And sometimes people that are new will look at this and say, okay, do they need the closing costs or the cash to close, or is it both? Or it's like, well, the answer is that cash to close is what they need to bring. You flip over to the next page. So you see a discount point. And right now you're seeing this a lot in our end of price. So like if somebody calls us and says, hey, what's interest rate today? We say 5.5. And I say, but you could get 5.25 if you want to pay a discount point, and that, or a percentage of a point. So like that fee that they paid of $509.20, they were able to get a 4.375 rate. And it's kind of sneaky in our business because I'm seeing this a lot right now because rates have went up. People will be calling and just say, hey, what are your rates? And someone also will quote a rate that has to required to be bought down. And that's not really fair. So, and I've run into it actually quite a few times lately. I had a customer that I had pre-qualified. They were out looking at the house and he called me back and, can you do any better on the rate? And I'm like, man, that's our best rate. And a couple days went by and I emailed him and he goes, oh, I found another lender, thanks anyway. I was like, okay, that's fine, man. It's a sales job. We all have that happen. I said, but could you have them send me a worksheet just showing their closing costs? He's like, yeah, sure. I mean, we had a good relationship. He sent it to me. They were charging him $8,000 to get that rate. And I emailed him back and I highlighted and I just want to say, just to let you know, we can do the same thing. You can buy your rate down and get this rate. But here's the catch. Like he'd already sent them all this information, got started with them, and he's like, well, I'm just gonna stay with him. Like, well, that's fine. It made me mad personally because I feel like you were kind of being disingenuous up front when you were shopping rates. And so, but anyway, so that's what the discount point is. The underwriting fee is the fee that like what Stockton, what we charge to do the loan. Appraisal fees. And you see that on the right column, it says before closing. That's because we collect that up front. Used to be somebody would pay for an appraisal, they get into the middle of it and say, I decided not to buy this house. And they hadn't paid for the appraisal, and guess who got to pay? Loan officer. So we say, you know what, if you think you're interested in this house, we're going to collect the appraisal up front. Make sure you're serious. And then the title services for the title insurance. And on the right side, the seller pays, which if you're listing a house, these might be some of the questions your people would ask you. You know, as a seller, you got to pay to have a deed. You got to pay some fees to get the house sold. And just while we're talking about it, you know, probably the most important fees that are down there is right. Look under letter H, which you will personally want to check that one yourself to make sure that those numbers look right before it closes and all the money's dispersed. And then you call and say, wait a minute, my commission was supposed to be $6,000, not $4,000. It's like, okay, well, let's call the seller and see if they'll pay that to you. Good luck. So, you know, make sure that those fees look right. And then back on the borrower pay on that left column, just so we can kind of go through these, they're going to pay under other costs to record their new mortgage. You guys probably know if you bought a house, you pay a year up front for the insurance. And then whatever it is, like this guy, his insurance premium is $1,500. So if you divide that by 12, you go back to that front page, when you look at like taxes and insurance, you know, you collect a 12th of that each month to put into their payment. So next year when that payment comes due, that money's in that escrow account to pay it again. And that's the same way with the taxes. Prepaid interest. So like this guy, we closed, looks like on the 15th. So you always collect interest from the day you close to the end of the month to get them on the monthly billing cycle. So if you bought a house in May, they collect interest through June. The first house payment will be due July 1st. And that's helpful sometimes when people are renting and they're in a situation like I'm trying to figure out my budget, when will my first house payment be. And then we talked about the real estate commission. And then at the bottom, it gives you a total. And if you flip it over to the third page, the top of it is like the original estimate that I gave to the customer. And you'll see that when he originally talked to me, he was gonna put $10,000 down. And then when we got closer to closing, he changed his mind and wanted to put more money down, so he ended up putting like 29,000. And at the bottom is just kind of a screenshot of the whole transaction. And at the bottom on the left is cash from the borrower, what they're gonna need to close. And on the right, how much the seller is gonna get from the sale of their house. So if you go to list a house and then someone's talking to you and they're like, okay, if we list my house for 200,000, how much should I clear? You're probably gonna get that question. So here's kind of what you'll do is you'll say, okay, let's write it down. We take 200,000. How much do you owe on your first mortgage? 100,000. Write out the 100. Or we're going to use a realtor. Let's just assume 6% sales commission minus 12,000. You have to prorate taxes. You know, the people that own the house for their portion of the year have to pay their portion of the taxes. So you subtract out the taxes. And then if there's any closing costs they're willing to pay for the buyer, you subtract that off. And then you can kind of give them a good and I think you can give a pretty good answer on like, here's about what you'll clear on. So a lot of people want to know that. And I go through it all the time with people, but they may ask you the same thing because obviously they want to know how much they can put down on their next house. I don't know if you guys, if you don't, if you want to email me, I will send you a phone app. And over the years, I've used a lot of different financial calculators. The stock and invested in this phone app, which is good for us to advertise. But what's great for you guys and even myself, it's got a financial calculator on it. Now you guys can't see this, but if you just hit the calculator button, you can hit purchase, and then it lists the different loan types. So you can put in like FHA, put in the sales price, how much they want to put down. So then you can estimate the taxes and the insurance. It puts the PMI in there for you. And you'll get that a lot. I get that a lot. How much is my house payment? And then with new home buyers, I'll usually send them this app because I'm like, they text me every 30 minutes. What if we put $500 down? I'm like, it's 30 cents left.
That's right. I just had people like those who ask me, what if we do this? What if we do this? I'm like,
It's 20 cents a month.
yeah.
No, they do. And it's a lot of young people, they're first time buyers, and it's good because they're conscious of their budget.
Right.
But it's always disappointing when you say, okay, you put $10,000 more down, it's $60 less a month.
Yeah.
That's it.
I'd rather have the 10,000, yeah.
And I'll talk about that in a minute too, with some of the loan products, because that's exactly what I tell people. Like, hey, would you rather keep
Well, what I
it?
tell them is take that money and do double payments the first year, pay off some of your
Right.
principal.
Or just have that emergency fund. Or, you know, you buy that new house, now you want the new house, and instead of credit, buying it all, you have some cash. But anyway, if you want this app, just email me, it's on the card.
It was so good. I used it and then I got a new phone and I didn't have it anymore.
Yeah,
I used it like for the first year, I think, in real estate. It was so good.
no, it is good. And then like I use it all the time on the weekends because I'll get realtors still text me and it's like, what if my borrower buys this house? What's the payment? And then I'll figure it out and don't mind to do it. But if you do it yourself, because, you know, a lot of times I'm playing golf and I'm like, yeah, I'll answer that later. You know, you got 4 hours where I'm ready to answer that question. But so yeah, it's a really good financial calculator and will figure your payments up and it's pretty neat. Go through some of them. Different type of loan options that we have. So a question I get asked a lot, it's like, what do you mean? What's an FHA loan? What's the deal with that? Well, it's just a government insured loan. But the government, when they were back in the 70s, they were starting these programs, they were trying to help people buy houses. And I think we're going to see a resurgence of government programs because this housing crisis, whatever they want to call it, it's a real thing. It's like, it's really hard for young people to buy a house, in my opinion. With the prices the way they are, just that's a whole nother story. But FHA said, okay, if you got a little bit lower credit score, you got higher debt ratio, you know, it's a whole lot easier to qualify for an FHA loan than it is a conventional. And that's all you need to remember is like, it's just like if a borrower tells you like, I'd like to buy this house, but my credit's not so great. You know, I still own student loans. And not that you gotta sell them on a loan, but FHA loan is probably gonna be a good option for them. And I do a lot of loans through Kentucky Housing. I don't know if you're all familiar with that agency, but they have programs to help first-time home buyers. And they've got a program called Down Payment Assistance, DAP, that you can borrow up to $7,500 for the down payment. So when you get these people that come to you, it's like, oh, I want to buy a house, but I don't have any money. It's like, well, when you look at this sheet, have anybody here done a rural housing loan yet, USDA? So they do 100%. It's similar to VA. It's a great program, but you have to be in a rural area and you have to be under an income guideline. But if you meet those qualifications, it's a great loan, and I do a ton of them. And really, most contiguous counties around Fayette qualify. Fayette does not. So if I get a first-time home buyer with no money, usually it's a Kentucky housing loan if we go through Fayette, you know, if it's in Fayette County. So yeah, that ag loan or the USDA loan is 100%. It's a great loan. The VA we talked about. Conventional loan is typically anywhere from 3%, as much as you want to put down. Conventional loans are typically for people with strong credit, bigger down payments. The government loans all have government fees that you pay, either they get financed in the loan when you buy it, or in the monthly payment, which the conventional loan doesn't have that. We do offer a doctor loan, and sometimes if you have a professional doctor that's just got a medical school that has a ton of potential, but doesn't have a lot of money right now, it's a good product. The rural hobby farm, I've done 2 or 3 of these last year. Say it's a 50-acre farm. As you guys know, like that's hard to get a loan on most conventional type products because there's too much value in the land versus the house. But with that rural hobby loan farm, we can do those. And this construction to permanent financing, I don't know how much you guys get into financing with modular or manufactured homes, but we've got one guy in my office that has made a career out of doing these, and he works a lot with Clayton Homes. So you might sell the property or however you're involved in the transaction, but we offer a product that they can borrow the money to get it set up, get it closed, and get it on, you know, fixed monthly payments.
And I do get questions about that a lot. They're wanting to buy the land, but then they need so much money to put down the land, they don't have money left over for the home. And all they want to do is a mobile home.
And then they need to look at these construction permits.
Okay. I didn't know that was a product.
And actually, I usually refer them to the guy in my office because I don't do that often, but he's done it for 25 years. And it's really, when you compare it to like the Vanderbilt mortgages and some of the other stuff, they're like 12, 13%.
Yeah.
I mean, we can offer on these manufactured homes, like and rent you down your house.
Yeah, they're super high.
So
What about straight up construction loans? Because I get that a lot.
I get that a lot, but we don't do
that.
that. Yeah.
It's just, you know, they need to fix the house up because there's just not a lot of quality homes until they find something they like, but it needs.
Well, let's talk about that next one.
Okay.
The home improvement loan.
Okay.
So there's a product out there, and in this market, it's actually a good product. It's called a 203K. You can buy a house, you guys can close on it, just like normal process. We're not waiting for contractors to do work, but they can borrow up to an additional $35,000 to do cosmetic work. So you go show them this house and they're like, oh, it's great, but the carpet sucks and the cabinets are 100 years old and whatever. You're like, okay, but what if you fix this up? I don't have the money to fix it up. But what if you had this 203K loan where you could borrow up to $35,000 and you could do all the improvements you want? And they get with us, we say, yeah. And the way it works, we'll just use easy numbers. Say the house is listed for 100,000, it appraises it, it sits for 100. If the appraiser will go out and say, yeah, if they do these $20,000 in improvements, that house will be worth that much. It's like, okay. So then we get an appraisal based off of that value as if it's fixed up. Now, the caveat to that is, it trips up a lot of people, they want to do their own work. And we don't allow that. It has to be contractors. And if you been around people like me, I started a project in my house and pretty soon I'm calling the person that can do it. I'm like, hey.
So this only works for FHA. Like you
Right,
can't, it's not a conventional product.
correct.
What if they've already bought the house? Do you have those kind of home improvement loans? I guess that would be a home equity loan.
Yeah, they get home equity. And then I was in banking for a long time. And my suggestion to those people would be like, go to your local bank and ask to basically do a construction loan.
Mhm.
And they kind of the same process, let you borrow the money to fix it up. And then once it's finished, then you still want to try to put on a 30-year fixed rate.
How soon after purchase can typically someone do a home equity or home construction loan or whatever?
So how much the equity is risen, right?
Well, yeah, so like if they bought the house and say 6 months ago, and this is a realistic probably example, for 150 and it appraises for 175 today over 6 months, they could probably go to the credit union and borrow 25,000 in equity. It happens pretty quick. There's not a time limit that I'm aware of. Now, there's a time limit if you sell the house and pay off their mortgage, because it's no closing cost loan usually. But so if you sit, like if you close that account, that within 6 months, they have the fee or something.
I gotcha, okay.
So do you guys have any questions for me on anything that we've talked about?
Those are two really good ones.
Yeah.
And I do get asked that a lot. Ours would have qualified for like, well, these loans are houses more important.
You're gonna cover other stuff or you don't?
Yeah, I'll take any questions, but that's kind of like the outline they gave me, and I said I'd be done like by 2, it's one thing gave, and everybody's busy. Yeah,
What, basically just with the whole, I talked with another realtor and they over at Berkshire Hathaway, and I'm asking like why people are struggling today. They buy homes, and one of the reasons is there's a lot of like, I think I read somewhere in an article, 26% of investors, it's up by like 13-something% from last year.
Right.
Investors are all cash buying homes, so first home buyers can't buy those homes because it's all cash they pay. And then also he said that a lot of people were like losing their jobs due to COVID, and then they're now just starting a new job, so it's hard to qualify, or they didn't even start another job or get their old job back. Like from your end, what?
yeah, so let's talk about the code for a minute, because we run into that.
Yeah,
So let's say somebody was a waitress and their restaurant closed for 6 months or a year, and they were drawing unemployment, but they had worked previously, like the last 10 years, right? And then they were off work. Like a lot of times in our world, if somebody's not worked for 6 or 8 months, that's a big problem. Because that's an indicator like, okay, they kind of given up, they don't want to work, and that's hard to unbreak that one. But if we can document, like, hey, they worked here, they got unemployment, they went back to work as soon as they could, then we can work around it.
okay, so basically, if there are people who have, well, they want to buy a house, right? And say also like a lot of like, I forgot the percentage, but there's like a ton of people from other states that are living here, and you know, sometimes they have questions about, well, can I apply for a mortgage and qualify?
Well, and a lot of times people live
That's also like job.
no, like so many people now can work from home. I have done a ton of loans in the last 2 years because COVID showed everybody that like you can work from home. So, you know, it used to be a big red flag for us, right? Somebody's moving from Colorado, they're gonna buy a house in Lansing. It's like, you know, are you gonna live here, or are you buying this for investment? Or, but they're like, yeah, I'm gonna live here, but I'm gonna keep my same job. So, yeah. And then the other thing, and I watched something on 60 Minutes, I don't know if you saw it, but there was a Canadian company that bought in the last like 5 years, 30,000 homes, I think is what it was, in the United States
Yeah.
as rental properties. So that's your first time home buyers are gonna buy, you know, you guys,
Up against.
Yeah.
A lot of Airbnbs are on the rise instead of like.
Yeah.
The short-term rentals.
Which I understand, I want to buy an Airbnb too. but-
Yeah, I do too. I mean, yeah, the short-term rentals are taking away a lot of properties for first-time home buyers.
It's really just hard if you have that like budget as a first home buyer, because all the houses, they're getting asked way over asking price usually because it's multiple offer situation. And yeah, and so they can't get that lower income house. Cause like my partner bought a house 2 years ago, and it was like right before the market went like crazy. And he was looking for something in the more like, cause it's just like a temporary home. So he's looking for something with 250. Everything 250 was out getting asked for 310 by then already.
Right.
And so then he's like, well, I'm just gonna get something for 360 and get it for like the actual like appraisal cost. And so that's what he did, and now that house is now 500,000. And it's like insane in 2 years.
Yeah.
But like.
That's the
but
market's
you-
done.
yeah, but if you think about, like,
Huh?
yeah, but if you think about people who just like
Lexington?
don't have the extra money to be like, yeah, no, like I can just go get hired, there's no.
Yeah, last year in Lexington, in the summertime, we would have things 4 hours. That's all it was on the NOI.
Yeah.
And we were doing $40,000 and $50,000 over asking
It's-
with $150,000 down payment on a $200,000 home. So the home cost 200,000. We were putting in 240, 250,000 with $150,000 down payment, the girl was solid. All we asked for was a home inspection. And we wrote, I think, 20 some offers before I found, what we did is we just waited, we waited till winter. Because we could not get in our house. We couldn't get into one. We're going 50,000 over asking. It's not even on raise.
Yeah.
Make it well now.
We sold our house in 18 months, so we bought our house and then sold it for 18 months, but we sold it for $130,000 more than we bought it for.
18 months earlier. And what, first day, all cash?
First
Yeah.
day,
Like,
we got
got it.
all these offers and then, yeah, it was an all cash offer.
5-day close.
Way above asking price, no inspection, I mean, we're just
Oh,
like.
it's just insane.
It's no
Yeah.
fun. It's no fun as a buyer's agent to work with
Oh,
clients.
no.
Yeah, and there were realtors that told us like, come on, it's our first time home buyers, we can't.
Right,
It was just
yeah.
like, yeah, we're gonna take.
Yeah, no, I get it. The sellers trying to make their money. They have no personal
For sure.
connection to anybody.
Well, somebody explain this one to me, because I've seen this contract, and maybe you guys have done the one. Okay, I'm gonna sell my house to you. That's contingent on me finding a house in the next 60 days.
Yeah.
That's looking more and rent back,
So,
and renting it back.
Well,
Yeah,
I had-
yeah, they'll like.
Rent back to the seller.
Yeah, like,
You can,
buy
you
it
take
now.
all, yeah, buy it now, just take all the time you want to find your own.
But,
Well, we have a house.
right,
Yeah.
but I mean, these people, because I've got a situation I'm in right now, where this husband and wife, they've signed this contract.
Cause they wanna lock in that mortgage rate.
Well, you can't even lock it in, you have a contract on a new house.
Oh, really?
So they went out looking, and of course, they're picky as everybody is.
Right.
Like, we can't find the perfect house.
Oh,
so-
I know, it's.
And I'm like, okay, so these people signed a contract to buy your house, and they're kind of in hold mode right now, right? Waiting to buy your house, and they think they've got a home, and you're calling me saying, I don't think that we're gonna do this because we can't find a house.
Oh,
And now prices have gone up on other homes.
Right.
Well, that's the other thing, is really the buyer then could, I think they can take them to court and sue them over stuff like that, like interest rates going up and house prices going
But I
up.
mean, it's in the
Because we
contract,
waited
like,
on
if we don't find a house in the next 60 days, we're gonna cancel this contract.
Oh, my God, it's in the game.
I'm just, I don't understand how that works.
Yeah, like.
Especially when you start getting a daisy chain or.
Trader, signs the name, there's an agent who does a lot.
Oh, really? If we don't find a house, this is no one, what, oh, my God.
Michael, what do you think?
Because Austin and Jessica were about to buy a house like that, and I'm like, no, we don't feel good about this.
No, I don't feel good about that either for my buyers.
I was like, I don't blame you.
There was, that's my boss, he just sold his house, but he read in the contract that he wants to rent the house back for up to a year.
Yes,
until he
well,
finds
we
a
find
house.
house.
Yeah.
The buyers are buying a house.
But like renters are also having a hard time, like even just for a rental property, there's like multiple showings in one day, and then like the first renter's like, I'm gonna get it, and then all the other people are like, wait a minute.
Well, because
crazy,
so
yeah.
many units sold
Yeah.
when it was a seller's market.
Mhm.
I have a couple in Winchester. They own 400 houses, like single family homes. They're small ones. They sold them all last summer. And they're older. They're done dealing with it. They said, we're sick of paying everything in and out carpet every 6 months. When somebody moves in and out of here and there's holes in the wall and there's fleas on the carpet, we're done. And they sold everything. It was a lot of money. I didn't do them. I didn't do the stuff, but I know. If I'd done them, I wouldn't be here. I'd be on the cruise ship right now around the world if I'd done all that.
Right.
No, but I had met them because I showed the house and that's how, you know.
Yeah.
And and the problem is what we saw right after that is in the Winchester area, no rentals. I mean, nobody has a place to live now because all these homes sold. Now there's no rentals. And people have nowhere to live
Right.
because
That's a
the
huge-
renters didn't buy them.
That stuff in that area, that's a big amount of homes.
400 units they had and they sold them all. And I mean, million, I can't remember how many
Oh.
But
million.
even like with investors.
But they're like in their 80s, they're done.
Yeah,
They
you
don't-
can-
I don't blame you.
I don't either.
That's not what's on. I'll be quiet, you guys. Appreciate your time.
Thank you.
Email me if you want to get that app. I'm telling you, it's very.
I did
handy.
email you.
Okay.
Because I had it and I loved it, and now I got like some cheesy app that's not as good as yours.
Can you do a quick bit before you go?
Yeah.
So just, I don't know if you guys heard about the YPN, happy hour coming up on the 19th.
I saw it on the thing.
So yeah, it's at Rick House Distillery, free, appetizers and drink tickets, and it's just a fun thing, everyone's invited, and then, the fair housing fair on Saturday, the 21st. Tom, and that's gonna be an all day thing for, yeah.
Yeah,
Oh, nice. I should be there, I think, the later shift, later.